Let's take a minute to talk about dividends. What are dividends? A dividend is a distribution of some of the company's earnings to its shareholders. Shareholders are the people who own stocks in the company. The dividend is determined by the company's board of directors. People who own shares or stocks in a dividend-paying company receive a small portion of the company's profits paid out quarterly, so long as they own the stock before a certain date, known as the ex-dividend date. Dividends have several important dates that you need to be aware of. The announcement date is the date that dividends are announced by the company's management. The ex-dividend date is the date on which the dividend eligibility expires. For instance, if a stock has an ex-dividend date of Monday, May 5th, shareholders who buy the stock on or after that day will not qualify to get the dividend, as they are buying it on or after the dividend expiry date. Shareholders who own the stock one business day prior to the ex-dividend date will receive the dividend. The record date. The record date is the cutoff date established by the company in order to determine which shareholders are eligible to receive a dividend or distribution. And finally, and most importantly, the payment date. The payment date is the date the company issues the dividend to the shareholders and you receive your money. When you receive dividends, you typically have two options. If it's a cash dividend, you can either choose to reinvest it in the stock, meaning the money you get from the company will automatically be used to repurchase more shares of that stock, or you can choose to take it as cash and do with it as you please. We can talk more about those options in another video.